Hello, welcome back to Core Finance. I'm Matt Brown, joined by Connor Campbell, financial analyst at Spreadex, and we're going to look at the pound versus the dollar. Stable cable, not necessarily strong, but it feels stable. This 133 handle, it seems quite happy there for the moment.
Yeah, no, it's crept over yesterday. Was eyeing up 1.34 as well. 8-week highs. A decent recovery since at least the Bank of England rate hike and the subsequent drop of that. You can see, been pretty, even though I think it didn't necessarily feel like it on a day-to-day basis that cable was doing too well. But if you look at it steadily every day, it's been creeping higher. I will say from our clients' perspective, they have now been selling it quite heavily around the 1.335 mark. How much it pulls, it could just pull back to 133 and a bit below and it'd be fine. Like you're saying, it probably can hold above that 133 mark. In terms of this week, it's mainly sort of US based. I think that might be why they're selling it, just because the focus is on the US this week. You've got the second estimate third quarter GDP figure on Wednesday. I think that's expected to be revised from 3% to 3.3% of the annualised rate. So that that could give the dollar a bit of a bounce. The dollar is struggling, sort of full stop, not only against the pound, but against the euro, against the yen. You got Yellen testifying on Wednesday. How much sway that holds over the markets, I'm not quite sure. But we are coming up to that December rate hike. Investors will want further hints on, obviously that hike is pretty much a guarantee, but investors are now a bit concerned about, well, is that it for a while? This is sort of what we saw with the Bank of England, that you're getting this hike, but you're going to have to wait a bit longer for anything else. And that seems to have been what's helped drive the dollar lower in the last couple of weeks. On Friday, you got the UK and US manufacturing PMIs. I think the UK figures are expected to climb very slightly, and both the Markit and ISM US figures are expected to dip. So by the end of the week, you could see the pound, once again on the best foot forwards. I do think it's going to be perhaps on Wednesday the most movement around that GDP figure, especially if it's. If it is higher than that initial reading, and I guess the Republican tax plan, things like that, that seems to have hit a wall again.
Yes.
That again sort of softening up the dollar in the last week or so. I think you've had a fair amount of sort of pretty bearish broken notes on the dollar, not looking too good heading into 2018, expecting it to pull back heading into 2018. So, like I said. The pound can fall, but maybe it will hold around the 133 mark, because there isn't enough this week to suggest a complete reversal of the last fortnight's worth of gains. Really, I think that's our clients are probably more looking for a slight pullback rather than a complete backslide from where we were on Monday.
But interesting that they're sellers for choice, so bear that in mind. In the meantime, Connor Campbell, thank you for joining us.
Thanks so much.